The Deal Room.
Ladies and gentlemen, welcome to another lovely Thursday installment of The Deal Room. I am your host, Darrell Mills. To my right, I got my boy, Jose Martinez. Jose, how you feeling this evening?
I'm doing well. Excited about today's topic.
Yeah, I'm also excited that Lucas is not on it, so to move a little faster. We don't, Lucas is not going to be a robot today. You know what I mean? We're going to have some flavor in here. You know, a little bit better English in here today. You know, we got to my left, Lucas's best and only replacement. We got Stan the man, Stan the closer. Stan, how you feeling this evening?
I'm feeling fantastic, ladies and gentlemen.
Yeah, look at that smile. Smile only your mother could love. Ladies and gentlemen, listen, 10 years ago, if you wanted a mortgage or a business loan, you did what everybody did. You walked into a bank. Today, you can apply from your phone in 5 minutes. This evening, we really want to dive or delve into the tech. The tech part of the industry, both in business financing and in real estate financing. We want to inform you, ladies and gentlemen, out there about how realistically time kills all deals, but how we can be speedier with the submission process. Jose, you want to take us away?
Yeah. So the first thing, today's segment is obviously why tech is actually entering the space, the mortgage space and the business lending space, and how does it affect whether it's good or bad. On the business lending side, one of the things that it does do on a positive note is it helps our underwriting process. So that's one of the key things, right? With technology, everything from reading bank statements to summarizing, let's say, tax returns, to summarizing credit reports. So it definitely makes it much easier to, just speed up the process. And that's why a lot of the time, especially now, you're able to just go on your phone and get literally not pre-qualified, but approved within the matter of minutes, because you're able to link different accounts, whether it's your bank account, whether it's, the algorithm pulling LLC documents, Secretary of State information. Everything now is juggled through APIs, right? But that's on the lending side. On the mortgage side, Stanley, how is it? Is it better, worse? How is it impacting mortgages?
It's streamlining the process. It all depends on the company, right? Because once ChatGPT came out, everyone built their own type of AI. So it all depends on the company, their capital investment. For the bigger companies, I don't think there's much of a change. They're not moving as quick as the small ones. But it is affecting change. It's new technology. It's like phones went to cell phones went to WhatsApp, right? So it is affecting change, streamlining. Right now, we're slowly getting to the point where I think physical appraisals won't be necessary eventually, unless, depending on the risk factor. When it's running title reports, there's not always a fax that needs to go out. You have to wait for someone to pull the information because a lot of stuff is in a cloud somewhere. So I think it's going to streamline, and actually the savings, hopefully, that I see so far are going to the consumer because now they're not paying these inflated costs.
Do you think, Stan, that this was also aided by the whole COVID thing? Like, do you think that because just lending in general is one of the largest industries in the world, right? Lending in general. So do you think that was kind of like COVID, by people doing everything remote and sending in docs remote? Do you think that just that little time period, in 2020 and 2021 and a sprinkle of 2022, do you think that COVID is kind of what, kind of catapulted everybody, the majority of people in the lending space to try to move towards a more techie thing, and then now it's just blowing up? Or do you think this was just out of the blue?
I won't say it's out of the blue because let's be honest here. All the tech that's being used was here already.
Correct.
It's just either it was shelved, they felt the consumers weren't ready for it. Because just like call any technology you've ever dealt with, right? It's sitting on a shelf somewhere for years before you use it. But the main pain point for a lot of companies is education. How do we educate the consumer? How much capital do we have to spend to educate the consumer on the product and the usefulness? Think about it. Some people still use landline phones. So did it accelerate? I think it was just timing, the perfect storm.
Yeah.
They had it already. There was a need, so they didn't have to really educate. They educated on how to use it versus how this affects your life. Do people still like using Uber Eats and DoorDash? Some people still want to walk in and wait for their food and watch it, but some people were forced.
Now, just to add on to that, Darrell, I think that my view is that I think that it definitely sped up the I would say the programs. Yes, the fact that you had to switch over, and the reason why is because remember, everyone's working from home now.
Yes.
So how do you do that? Where if you have an office, and a lot of these businesses had mortgage companies, lending companies, they had offices where now everyone works from home. Now you can't manage if they're doing things efficiently. So it put them in a position where how do I now, which honestly, I think it backfired for a lot of employees, because now that's why a lot of employees are getting replaced, right? Bankers are getting replaced with AI because now the company realized, okay, let me invest in this technology so it can be built out, but I don't need Joe Schmo anymore because it's coming in and he used to evaluate and read the bank statements. Now, instead of having 10 underwriters, let me just have one that can oversee everything in the event that something crashes, it goes down, servers don't work, etc. But I think it definitely, the pandemic did make everyone realize, you know what? We can go ahead and shift where the workforce isn't as strong anymore, where we can now automate everything.
Yes.
But guys, that was in place before COVID. If you don't remember, one of the biggest uproars when you remember Home Depot went into big news media and Walmart were kiosks. Kiosks were here before COVID, where instead of paying a 14-year-old, 15-year-old, let's say $14, $15 an hour to swipe, they started rolling out kiosks in Walmart and Home Depots. That's to some degree, that's automation.
No.
How wouldn't you say that?
I would disagree with you.
Yeah, I would have to disagree with you too, but I had to disagree with you too because when you're speaking about like somebody that's gonna like
you have to manually.
We're talking about replacing workforce.
You still have to manually grab the object, right, and scan it to the QR code. What they did, if anything, was smart and say, "Hey guys, you are the consumer. You do it yourself, so I can save money on not having to pay an employee." I mean, because think about it. What happens? You hire someone. Right, whether the majority of the jobs, at that time, or at least that I know, it was available to high school students, right?
Yes.
Where they would go in, and it was an opportunity for them to go ahead and make money, make money while after school. So you're still grabbing the object and scanning it through. That's not automated.
So hold on, but listen what you just said, right? And maybe I'm wrong, but
you are. But go ahead.
Probably.
Right? Listen what you said. You said it's different because in the kiosk, they were able to tell me transfer the labor where you did the labor for free. The company saved, right? What do you think you're doing when you're using AI? When you solve your job problem and you put it in AI, you're educating their employee for free. And then they turn around and replace you. Where do you think that data is coming from?
Correct, but you're teaching about
So for every MCA company that goes,
what you're saying is
calculate calculate the NFS. What NFS? No, not sufficient.
Ladies and gentlemen, listen. It's 5 o'clock on a Thursday. It's been a long week.
But hold on. But I think you're right to a certain extent. Like Amazon, what Amazon did, that right there is implementing AI. I would say technology because I can put all my stuff in a bag. I don't have to scan it. I can just walk out and it charges me. That's different. That if you said something
he's
like that,
talking about Amazon grocery store.
Right.
Yes.
Right. You're talking about
when we went to Miami. You remember?
Yeah.
You were at the bar taking shots and I walked in and walked out.
Not me. I don't drink. No. I understand what you're saying, but you guys are, and I love that we have like this free flow dialogue now, and instead of just bringing everything down to the segments, because this is a great talking point. These gentlemen talk about two totally different things. Jose is talking about smart grocery stores in which you can walk in and walk out with your stuff and you get charged, right? What Stanley's trying to say is the actual people that are online that are ringing you up groceries versus just going to a kiosk and manually scanning it yourself, the self-checkout. Is that what you're talking about?
Okay, let's go to the origin of it. Do you know why Seattle's such a huge hub when it comes to the Apples, the Ubers? Do you know why they're a big hub? Seattle's actually like a testing center for technology.
For tech, yes.
Yeah.
I knew that, but I never knew why.
Yeah. So if you the first Ubers, the first Lyfts, the first Lyfts.
Okay.
Ubers, all those places, I don't know why. I can't tell you why the city of Seattle is the epicenter of everything test. Maybe they don't care if people die in AI cars. I don't know. Right? I can't answer that. But that's always the hub for tests. So that's why I say when you bring it, COVID triggered it, I'm going to bet my bottom dollar that there was a permit applied for that tech to be used in a city such as Seattle way before COVID.
No. I'm not saying what I'm saying is that COVID, and I'm sure you ladies and gentlemen out there can agree with me. Well, first off, I rarely used DoorDash and Uber Eats before COVID. It was rare. Now it existed. For me, it was like a here or there thing. But as soon as COVID happened, dude, I was DoorDashing every day. It was crazy. And ladies and gentlemen, you guys can look up. I think in the first quarter of this year, DoorDash broke all of their records in the first quarter of 2026. They have never seen it was record-breaking revenue for their business was in 2026, and they said, and what they're predicting is that really going to restaurants and stuff is almost starting to become outdated. Now, we're not going to say it's outdated because everyone loves to go out and grab a bite to eat, but record-breaking numbers as far as takeout is concerned, it shows that consumers are really starting to shift towards just doing everything in the comfort of their own home. And honestly, sometimes they don't even care to wait for the food. They just don't want to leave the comfort in their own home. They would rather be at home and doing everything. And what showed us that experiment better than COVID? Like we never tested like that.
So you're saying prior to COVID, your OnlyFans use was less than during COVID?
Well, I mean, if you guys know, OnlyFans stock definitely jumped up 80% during COVID. That's what I'm telling you.
That's because everyone was home.
That's what I'm saying. People were at home. They were able to be more creative.
I want to see your account.
And business professionals are figuring out how to automate things. Now, what I feel like is the companies that did not adjust after COVID and did not start implementing more tech-savvy ways to grab data, more tech-savvy ways to be able to automate processes, like those companies are getting left in the dust.
I agree with you. Listen, some parts I'm playing devil's advocate because I just like giving other perspectives. But
I love that you're a giver.
Oh my God! But what people capitalize on,
don't blush,
right, is the gold rush that happened during COVID. That's what really all comes down to, right? It was the gold rush. Everyone had time.
Yes.
And in the world, let's say not the world, let me not speak for every country, but in New York, we're the hustle and bustle. You wake up early, you know you're going to have long days if you really want to make it out here, right? And it gave people in major cities, and some, let me not just put in different pockets, but everyone had a time that they could just breathe.
Yeah.
People changed professions. People had to sit with their own feelings and go, is this what I want to wake up to every morning? Did anyone even use Loom prior to COVID? Zoom jumped through the roof. Gmeet, that stock went through the roof because now you have virtual meetings. Mm-hmm. We were doing closings not before COVID, where you could do a closing. The title company would go to the window of your house. You would have to stick out your head out the window with your license and they would take a picture of it. And that proved you were the person signing your docs. I've had closings where people closed on a WhatsApp video app and on a Facebook video app. Are you kidding me? Prior to that, if you didn't show up physically with your license and someone swore you were the person in that license, you couldn't do a real estate transaction.
Yeah.
You know what I mean? So when I say that, all that to say this is that it was a gold rush and it's still happening because AI, I agree, the data came in, they're like I said, I believe all that that tech was on a shelf.
Yes.
And they're like,
it was here, but it was on the shelf, you're saying.
Correct.
Gotcha.
Because there was something I was watching the other day where I think Nokia or Kodak screwed up. Like they had the first phone or camera. And no, it was Canon or Kodak. They had the first
Canon.
Yeah, they had the first I forgot what it was. Like camera phone or something, but they digital camera. They had the first digital camera, but they were making so much money off of film that they were like, nah, shelve it. And then someone else invented it. And then by someone else inventing it, it wiped down their whole business in that aspect.
Yeah.
For the record, Kodak is still $1 billion company, but not because of film. It's because of patents they own. They're a company that owns one of the most patents in the world. For the record, just a little tidbit. But that when it comes to innovation, so that's the example of they had that in the pocket sitting. So when I think of AI, I think it's been running this whole time.
So now I'm going to ask you, both you gentlemen, the same question, and I want to hear your response. So Jose,
Yes.
you know as well as I do, sometimes when you want to get a deal done, you got to submit the file, and you also got to call the underwriter with a little bit of information.
Correct.
You know what I'm saying? There's some things that a bank statement can't tell you.
You got to paint the story. You got to paint the picture.
Correct. I can tell you. I can tell you why that negative's there, and why, maybe the guy is usually doing about $75,000 a month. This month, his deposit that usually hits on the 28th didn't, and now it hits on the 4th of the other month. The stories that you could you have to paint the pictures, like you said, right, Jose? Do you think that if we move completely to just AI underwriting and we lose that value of being able to have that human-to-human interaction and relatability and be able to speak about the war that's going on and how it can affect Trump, do you think that losing that human interaction when it comes to underwriting, do you think that is going to be a bet? Because it's going to happen one day. Right. One day, there's going to be no more human underwriters. You're just going to have to click a button and figure out if you're going to get approved or not, right? Do you think that if we shift to that one day, that's going to be just an all like a negative benefit to us as the brokers trying to get deals done?
I would say no, and it's
Really?
funny. It's funny you say that.
Really?
Your question was, is it going to be a benefit to us, or would we lose clients? Right? That was the question.
That wasn't the question.
Or replace it.
Yeah. Replace. Like if we completely took all human interaction out of underwriting, do you think that's going to
No, not underwriting. Remember submission, because you're
submission. Yeah.
As submissions.
Yeah.
So all right. So I would say it's not. It definitely isn't. And I can say that very confidently because we just and we've obviously spoke about this a couple of weeks ago consistently about how we are working with a tech company to go ahead and do mortgages. Yeah. Right. For business purpose loans. Business purpose loan mortgages. Now we're seeing it now where the main thing is everything is through an algorithm. Speed is there. However, where it pulls the value of the property is through an AVM, right? An automated valuation model. They don't do appraisals, but now the disclosure or what you have to let the client know is, hey, at times your property may not come up to the value that it might actually be today. Reason why is because let's assume I purchased the property, I got, and I did work on it. Now I did work on it and I'm looking to get a HELOC, a home equity line of credit on the property. Now, let's say that the work was completed yesterday. There's no record of that property having the new features or the upgrades that would give it value. So on that end, you still need the programs where a human element is put into place, right? So that's one. I would say that's one example because when you get an AVM, that's it. That's it. Everything is through a fintech company. This particular company uses blockchain technology to be able to speed their process up. Now, whatever is there, they go ahead and categorize it as truth, as there's, that's absolute truthful as far as the value. So I don't think that, yes, even though it's making a shift, you still will have the companies that will do the, I would say the manual underwriting, but what's the word that we use all the time? There's not the scenario underwriting, but the story underwriting, right? Where it is. It's
a scenario desk.
Right. Where now you're telling them, hey, this and this happened because of this, et cetera, or just on the appraisal side. Right. So that I think that even though tech is getting there, there's a lot of, programs out there that are allowing you to speed the process up. I don't think that it would get rid of sales representatives. It might shrink it or it might become more competitive, but I don't think that, that it's going to get rid of them, to be honest with you.
Okay.
Let me play
Stanley.
devil's advocate.
Okay.
I don't want to agree with him. I want to play devil's advocate on this one.
All right, now you're going to relate this to real estate, or you're going to come back when he just said on business?
You said real estate. That was real estate.
Yep. Now you were real estate.
Now that answer is a thought out answer, but I think mine is more real world, right? Most of, and I'm gonna speak for Americans, we buy our homes, we feel we can do what the hell we want with it, right? Most townships do not know if a person has a fence on their property because most people aren't applying for permits. A lot of America, if they convert their garage, they're now pulling permits. A lot of work being done on people's lands, they're not pulling permits, but they know the value of it.
Correct.
Right? Now, let's say me knowing that, it's either you're going to force people to conformity where everybody pulls permits and they're like, if I want value and I did this, I need to pull a permit. Do I think America's going to conform to that? I don't think so. I think there's going to be, that AVM will benefit who it benefits. The people that don't do that. Majority of people, and mind you, we're talking from a liberal state. New York is a very liberal state. When you go to a red state, there's a stronger belief on this is my land. I do what I want with it. I don't need to go to the government for permission. I pay my taxes. I pay my mortgage. You don't tell me what I could do on my land. And I build an extension. I think I did a deal in New Mexico where the township was like that. Listen, if I don't have to do anything on land, you can build what the hell you want. Just leave me alone. You're going to go to a point where people go, I don't want that. And the masses, I don't think, are going to conform to it because the other side will make it clear to you saying, now you have the banks in your business. So I have to, for me to get value on my property, I have to get the government involved. I have to go and pull permits for everything. When the appraiser could come in and be like, oh, yeah, central air. Oh, this is a 5-bedroom home.
Yeah.
This has, and just market, and then your valuation comes from there. When if you're going through an AVM, they're gonna go, oh, it's whatever the town says is there. What?
Yeah.
If you've ever seen a property card, and this is New York, so I can only imagine what they look like in other states. It says single family home, and there's a box. That's all it says. Because mind you, certain states, remember, certificate of occupancies are still fairly new when you think about the birth of America. And a lot of them at the beginning of time, especially certain villages in Long Island, the towns couldn't tell you if there was 1 or 12 bathrooms in there.
Yeah.
Because when they made the property card, it was simple to outline.
Yeah.
If there was a slab, if it was all exterior, it was never inside.
So they had no idea what was really happening.
A majority of the houses on Long Island, I can speak for Long Island, the town does not know the layout of your house. So going off of that data, they're going to go single family home, whatever the town has, and that's going to be a value. Now, what if I have a 12-foot ceiling basement, that's good, and I made it and finished it? I get my value with a person walking in.
So let me ask you a question. So what you're saying is that the human element won't get rid of the human element, right? So essentially, you're agreeing with me?
No.
I'm like, are you?
I gotta be me. I gotta be me. No, yo, hold on. What argument did I just? What's that?
You agree? You were disagreeing. You were agreeing.
You agreeing?
No, and you're right. And so
it's gonna force people. Listen, they're gonna make an effort. If you notice policy, they're gonna make an effort to make us conform.
Yeah,
because once the banks, think about it, they made you conform to put your credit card in an app so someone stranger to deliver you food. Right now, and it's a shocker to me, Uber has a feature to put your kids in an Uber to go places. I personally will never, but they have the data somewhere saying, you know what, it's good enough where in 5 years, 5% will do it, 10% will do it. It's crazy. So I don't know, bro. I'm just.
You're good. You're on a tangent, but getting back,
I tried to go against my own opinion. I tried.
Getting back to stuff, but
I tried.
But Stanley, you're right because it's. I guess I would agree with you that everything was shelved. I mean, not little companies. Companies started doing it little by little. Let's take Rocket Mortgage for example, right? Rocket Mortgage, well, the big thing was, hey, you can go ahead and get a loan quickly. That's why their name was Rocket Mortgage at the speed, at a speed of a rocket, right? And what happened now? That helped because it simplified. I think it simplified the mortgage process in some cases, right? Because then now other companies said, wait, hold on. They're closing X amount of deals. They were using the other company's data. to say we're falling behind somewhere. So it pushed them. So adding to what Darrell said,
Hold on, that's not a good example because Rocket Mortgage has one of the worst records and the highest default rate of people who never finish the application.
but that's because they don't have you follow a process.
I'm just saying, Rocket, ask any.
But it simplified the process, though. In order, that's different. That's follow up. But I can say, hey, what at that time was Rocket Mortgage was this. You could do it probably on the phone or the computer. You didn't have to sit down with a loan officer.
The marketing was good,
right? Well, the marketing, but also too, I think the process. You didn't have to sit down with a loan officer. I mean, before back in the days, a loan officer would come to your house, take the 1003, do everything with you face to face, right? That's why they have those questions.
Really?
That's why they have those questions. How did you take down this application? Was it face to face? Was it verbal, etc.? Now, what they did is they simplified it where everything was done through some sort of smart device, whether it's a cell phone, whether it's a laptop, whether it was an iPad, right? And then a massive online consumer adoption. And that's what it was. It was being able to now target the masses because who isn't on social media? Who isn't, trying to expedite the process? Have they fallen short? Possibly, right? And still, that has to do with follow-up. But the process to get to that point, I think that they went ahead and tried to adapt that, right? But now even to date, I have borrowers that are older. They don't believe in doing it online, right? They have to come into the office.
And that's also cultural. Mm-hmm. Like I deal with a lot of Haitian clients and they're so their social security card, their tax returns, they have to go to your office, scan what you need, and I need my documents right back.
Correct.
Yeah.
I'm not leaving my documents with you. Nothing. I need to have them in my hands. Mm-hmm. So there's still, mind you, baby boomers are still one of the biggest portion of America, and that's pre-computers when you think about it. So
Stan, let me since right now you got the floor. Let me ask you.
No, I don't want the floor.
You got the floor, bro. I just don't know which point you're going to argue for or against.
I have no.
But let me ask you this: what do you think is the biggest thing, Stan, in your opinion, in your expert opinion, only your expert opinion, Stan? What do you think are just like the biggest thing that borrowers really care about today?
Rate. Same thing they cared about yesterday, today, and tomorrow. Rate.
Wait. Now I would disagree. Now I'm going to play devil's advocate. I would disagree with you. I really don't. If there is a need for the money, I don't think that rate is really going to play a big factor. If it's speed. I think depending on what the purpose of the money is for, speed would be one of them. I think they would be on my top five. Would be speed, simplicity. I guess fewer conditions, right? Fewer paperwork, less paperwork, communication, right? Whether it's through the portal that you set up, you get automatic triggers, you get automatic emails, and let's keep it real, fast closings, right? I would say those are the top 5 things that borrowers now, as long as there's a need for the money. If it's just going to sit in your account, that's different. Then yes, rate, because you have all the time in the world to shop.
I don't own a home. I've never had to do a mortgage, but I know that nobody ever just wakes up and they're excited to fucking start doing a mortgage or excited to go and start trying to do a HELOC because
pull money from their property.
Because I feel like everybody's like, this is going to take a long ass time and so on and so forth. People don't even know that we can get a HELOC approved in minutes.
Correct.
You know what I'm saying? People don't know that shit's available nowadays. You know what I'm saying? Like if we were to tell somebody, yo, we have a HELOC that if it's an investment property, we can get you funded if everything in the scenario is clean, we get you done in 24 hours.
Their first question is, what's the rate?
Of course, because
hold on. No, but still speed. But what's the rate? The rate wouldn't really matter, but they're impressed about how low the rate is because they associate speed with cost.
Yes.
So the quicker you give someone something, the more they're gonna have to pay for it, right? So that's why they're like, okay, so what is the cost? I'm assuming it's high, and realistically, no, because it's a business purpose loan. When you go ahead and pull the money out, rates are as low as anywhere between 8%, let's say all the way to 11%. And that only is contingent or dependent on how long you want the money for, 10 years, 20 years, or 30 years, right? Longer you hold the money, the more the costly it's going to become. But yeah, at the end of the day, there has to be a purpose for it. I agree with that 100%. But even tapping into your personal equity, if your business is getting drowned and it has a possibility of actually going under because these payments are so high, 100%, the first thing you're going to do is try to tap into the equity because it's available to you and it's possibly available a lot of money.
I remember a podcast where you and this gentleman were like, tap into your home equity for your business. I think that was like 2 episodes ago, if I recall. I don't know.
No. You have to give some context to that. You said that the person is about to go bankrupt or the business is not doing well. So
you just said if he needs it for inventory, if he needs to reinvest in his business. It's like you guys are very big on take it out. No, there's a big difference between taking it out so I can go ahead and flip the coin again and see if I can make it happen, or every business
take it out because I'm doing so well. I need to buy more inventory so I can get it at a discount. That's the difference.
I feel like
play back the tape.
I feel like I'm stuck in between like some hidden tension right now because honestly, I thought you guys really saying the same thing.
We are saying the same thing because
Darrell just tapped in again and said rate, speed, and communication, which is exactly
the top 5.
Which is exactly kind of very similar to what you just said. I mean, listen, ladies and gentlemen, if people are searching for money, chances are they fucking kind of need it now. Right. Like that's what we would assume. If you're looking for money, you're looking to do this fairly quickly, but then. There's also another scenario where, and again, this is why it goes on a borrower by borrower basis, because I also know some people that feel like if you do it too fast, there's no value to it. You know what I'm saying? Or like if it gets done too fast,
value.
It depends, and I know where you're getting at. It depends on
the borrower, right?
Not really the borrower, but it depends on how the borrower has to pay for that experience. That's what it is. If they have to come out
about something else, but okay.
No. But think about it. There's a lot of brokers out there that what they'll do is they charge the clients X percentage once they either get funded from whatever program, right? Even if you're getting compensation internally, right, from the lender, you still are charging so I know people that charge them a broker fee, they charge them a success fee, they charge them different types of fees. Now, of course, the borrower will complain if, hey, listen, you know what? I have to now pay you 5%, 2%, 3%, whatever that is out of pocket after I receive the money, yes, they would definitely complain. But if you get that person the money quickly and they're not having anything come out of pocket, I don't think they're going to complain.
No, but there's a variable you're forgetting. I'm agreeing with you, but I think you're missing a point of it, right? It depends if you're dealing with the source. It gets layered.
Right.
Layered. So when someone's asking, I need a fee agreement, I need that. That's on top of the cost. Us as the providers of the capital, we have our normal expenses for the capital, but that's it.
Yeah,
you're gonna sit here going, hold on, I'm getting $100,000 loan, but I'm paying $50,000 in fees, $20,000 in fees. It's not even interest. Forget interest on the capital. Forget the interest part of it. But that's what I think muddies up lending altogether.
How so?
Working on a deal, still working on it right now. A gentleman in New Jersey bought a piece of land for I think $1.5 million. Built a beautiful house on it. He's a scientist, right? Makes good money, but his main money comes from inventing drugs. Pharmaceutical drugs. And he had a hardship. Ever since COVID, death and all the stuff that could go wrong went wrong with this guy. So I get the call the other day. He owes originally 1.2 when he fell behind. Now it's at 1.4 million, and probably to do this deal is 1.7. The property is worth $5 million, right? So when you look at that, some people will come in and do that loan and gouge that client. So it's like we provide a need where we don't have to layer it and take advantage of the situation. We lend on them, get the capital, and get them out of the situation. So it's like, that's what I want to use. There's a word I'm trying to use. I can't put my...
So, but hold on. When you think of that word, Stanley, so just once again, playing devil's advocate, honestly, you have to, okay, so one of the things is just the story that Stanley brought up. What I'm assuming that the client already did was exhausted all options.
Correct.
Went to the bank, went to this, went to that, did this, spoke to Bob, did that, etc., and the door kept getting shut. Right now you're coming in and presenting an option that you have available, whether it's because you've done your 50 years, 20 years, 30 years of experience.
Yeah.
Right. And I would say 100% you should charge for that. If not, because remember, at the end of the day, the borrower has the option. Bob, I can present the option to you. I know what the answer is, but honestly, you're going to have to pay me for it. You've already exhausted all options. You're going to have to pay me for it, and this is what I charge. You have the right to say no. 100% say no. But you're not going to have access, or you're not going to get access to this room, to this door, to this capital that I have for you. Because, I mean, correct me if I'm wrong, that would be more of a hard money lender, right? A hard money lender would be able to go ahead and do that, and it's their own capital. They're securing it by the property, but think about also too the defaults. How many defaults potentially that lender might have had, right? So yes, I completely understand it. Over here, over at whether it's Fund Rock Capital, Lendmate Capital, we go directly to the source if we don't do it ourselves. But in the event that you are someone that's a broker that does have the option for the client where you're not going to get compensated by the lender. Right. Of course, I agree with you 100%. You have the right to charge as long as you can put a value to what the service you're offering. And just like how I would tell every client, do me a favor. This is the option I have. This is what I charge. Go to everybody else. Once everyone turns you down, that validates my fee. That is going to, because there's no negotiating. There's no going back and forth because I know my value of what I can do. And if you had other options, you wouldn't be talking to me and coming to me because I know 100% you've already exhausted everything. And traditional banks are not lending that money, right? Unfortunately, to the pharmacist. And I sympathize with the scenario, but at the end of the day, this is business, right? You're looking
Dixie chain. That's the word I was looking for. No. Okay. The reason why that works out. Whoa. My brain is working so slow this evening. I apologize to the whole committee, right?
Community.
Oh my God.
Lucas.
I need to take a nap. I need to take it.
Lucas English.
Today's probably my worst episode ever. Bear with me. No, but I agree with Jose, but I think the part that I was going to say that I don't know why I went blank is a lender had his file before, right? And there was 7 people trying to get paid on that one deal.
That's different.
See, that's what I meant the difference before he came to us. So it wasn't just the lenders charging. Then one person's like, oh, I can get you a deal, gives it to someone else and wants to charge half a point.
Yeah.
It's like, I can get the deal and charges a point. And at the end of the day, the guy's looking at 12 points on a deal and the lender was only charging 2.
Right.
Damn.
So now the other people want to get paid on a $1.7 million deal. What does that come out to? 1.7.
A lot of money.
Yeah, 8,500 for forwarding an email.
Yeah, no, that's
you know what I mean? Like,
I don't understand.
That's crazy. Now it's in our lap, and we're not being excessive at all. But now we're actually getting results. So that's what I mean. That's what I was trying to get to when I agree with you. When you're like, your value. But some of these deals, and that makes people sour, is when you're like, when you really look at it, like, hold on, you want to get paid for forwarding an email? You're not even the one that has access to the capital.
But that's the fault of the broker or whoever's on that side, not the client.
Yeah,
not the client.
Probably where we lost each other. Not the client. And I think that's what we were referring to before. Because think about it. If I can present a program to you, right, where it's a HELOC, and the biggest obstacle when you're doing a HELOC is what? Tax returns, credit score. Right? That's huge. So right off the bat, you're getting knocked out. But if I can come to you and say, hey, I can give you a home equity line of credit where your credit score, if it's a primary, you're going to use it for a business purpose, can go as low as a 600. Number one, I got everybody else beat.
Yep.
Number two, you don't have to give me tax returns.
What about an appraisal?
Right? And there's no appraisal fee. You don't have to come out of pocket. Guys, that's it. But you have to know your product, but you also have to know what does the client need the money for? Because then it goes back to what Stanley said before, where it's rate.
Yeah, the first thing they're going to say, because all that sounds good, right? All that they're going to be like, okay, Jose, but what's out, 9 times out of 10, they're going to say that. Well, Jose, what's the rate? Is it going to be higher? Is it going to, because of all that convenience, they're going to feel like, easy to close of the day.
It sounds too good to be true.
Thank you.
And they're waiting for that other shoe to drop.
And you know what? We have different perspectives. The way the way Stanley would probably handle a client or their objection compared to the way because I tell everyone, listen, I'm going to talk to you like you're my college roommate because the last thing I want to do is waste your time, and I definitely don't want to waste mine. right? So sometimes, yes, I'm a little too blunt, but it's because I know that you've been shopping, Mr. Client. I know that you're probably frustrated with the process. So I definitely understand it. But if I'm getting everything out of the way, your next question to me shouldn't be what the rate is. Where do I sign? Right? And it doesn't matter if I'm giving you 8%, 12%, 15%, right? Even though they're not that high. But it should be you were the guy that was able to get this done for me and get me into the door. So how do I move forward? But thankfully, our rates are not that high, right? On a business purpose loan, if you're looking to refinance, do a HELOC on your primary, credit score can go as low as 600, 80% CLTV. You can close in as little as 5 business days. No tax returns, no tax returns needed, no appraisal needed, and you don't have to print out paperwork. You just link everything to your account.
Jose, really quick, CLTV, just for the people at home that hasn't been here for the past couple of weeks. CLTV is what again?
It's a collective loan to value, correct?
Combined.
I like to say collective. I would sound a little bit smart instead of combined.
But what you guys mean by that? But collective means that combined. So when you say combined, that means that what does that mean, sir?
The person has a first mortgage, so you have a loan to value, meaning what the property's worth versus what's owed on the property. So that's your first mortgage. So hypothetically, for easy numbers, let's say the property's worth $400,000 and you only owe $100,000. So your loan to value will be 25%, because 25% of the property value is debt. Now, combined loan to value is, let's say you get a home equity line of credit value of another $100,000. So now your combined loan to value on that $400,000 is $200,000, 50%.
50%.
Now, Jose made a valid point saying we have 2 different ways of presenting, right? One thing, I've been in business for over 10 years, especially when it comes to mortgages. So one thing I've learned is to show my value is to make the person know I'm the specialist in the space. If you just want to just hit a button or speak to some 18-year-old at a desk, I'm not that person to get on the phone with. If I get on the phone with you, we're going to solve it. And I need to know your pain point, because the speed is very important, but people don't know the technology. That's why I go back to education, right? I go to a client and say, at least for me, I go, you'll have money in 24 hours. They go, First thing, because they're wired or trained to walk into a bank. They're trained to, I'm going to get a call from a loan officer that's going to send me application. I'm going to go through what they call a 1003, a uniform loan application. I have to give my social over the phone. I have to give my where my employer's name, my employer's address, phone numbers. So because that's the process they went through for their first mortgage. A lot of people are used to it. They go through that process. So now when it's time to present them this way, they go, hold on. I'm used to using a phone tied to a wall. Now you want me to go to a cell phone?
Yeah.
Now you want me to go from a cell phone to talking on like a WhatsApp? There's a, hold on, how does this work? And a lot of times, which at least with me, the clients fill out the app without even realizing they're filling out the app. Not saying not without their consent, but they expect my questions to be more invasive.
You make it like a conversation.
Yeah, because I'm not asking where you work. I'm not asking how long you work there. I'm not asking for your wife's maiden name for security reasons. There's certain questions I don't need to ask because of the technology that we use.
So you're tricking the client? No, I'm joking. I'm teasing.
No.
The clients are very well aware of what's going on. It's during the process, they're very pleased, because even while I'm having that conversation, one of the best compliments they give me is like, I didn't even realize I could get a loan just with this.
And what you're referring to, I think, is the user experience is more user friendly.
Yes.
That's, and he's
in the right hands.
No, listen, but not even that. When, first off, I can tell you, ladies and gentlemen out there, we all show up to this office every day and we love what we do. We're on the phone all day. We're trying to solve complex issues for borrowers that sometimes they can't get deals done anywhere else. We have a niche product for them. We're going ahead and we're unveiling programs that they've never even heard about. The speed is crazy. The time to get it done is crazy. The overall efficiency on all parts is easy. And usually, just like Stanley said, When we're taking an application over the phone, they have no idea that we're taking the application. We're just having a simple conversation.
But they do know that we're taking that.
Of course, it's a skill.
You're
You're just very skilled. You're very skilled. And also, too, what you're doing really essentially is having a conversation with them, but you're not just listening, you're also taking notes.
Yes.
Right? Because it's not saying, hey, Mr. Jones, how are you? Right, Mr. Jones, etc. You live on such and such, blah, blah, blah. You're writing this stuff down. You're not just, he's not giving you the information verbally and then say, hey, fill out this application. And then within the application, it has what's your first name, what's your last name, what's your home address.
It's redundant.
That's what Stanley's referring to, is where now we're able to do it. And we actually were trying out a beta version of AI where our CRM system, when the client speaks, certain trigger words actually fill out the application for us.
Fields, yep.
So that when the client now says, okay, perfect, what are my next step? You're sending them over an application from within our CRM where now it goes and, it's half filled out for the client already, if not 90% of it. So that's going back to technology and how technology has evolved and how we actually use it as well.
But it also comes down to customer service, because you saw a need. If you don't pay, tech is at the end of the day, and I agree somewhat with Darrell.
Efficiency.
No, the human element. You can't remove it.
Nope.
Because think about it. AI is a blank canvas. At the end of the day, someone has to draw on it. Even if you're like, paint me a brown puppy, someone has to give the command.
Correct.
AI isn't just like, let me do a puppy right now. So even when you're like, hold on, the AI is taking certain words, certain parts of the conversation, and now an app that would take a client 30 minutes to fill out, they're only hitting one or two buttons, writing a couple, and they're done in 5 seconds. So even that has the human element combined with the the AI to make it more efficient. I don't know what's going on today, ladies and gentlemen. Do not, if you need to, snip me out of this episode because I'm messing up multiple.
Stanley needs a drink. No, but
water.
Listen,
coffee.
Listen, ladies and gentlemen, I have to tell you this. See, I don't care how good the AI is. AI is never going to be able to replace the excitement that the broker can invoke in you. Okay, AI is never gonna give you the emotional response that sometimes you just need to feel good about the deal and the process. I can sit all day and just fill out applications or whatever, but if I have somebody like Stanley and I do hear him on the phone, getting these people excited about, like, it's not gonna be a grueling process. You hear Stanley, he's bubbly, he's on the phone, he's making you laugh and stuff. It makes the process a little more pleasurable than if you're just sitting at home, you just fill out an application and you're just waiting for somebody to call you back. How many times have you guys been in the middle of doing an application online? You're like, I don't fucking feel like doing this anymore. But if you have somebody on the phone, it's a conversation, you're able to kind of hold your hand through it. It makes it seamless. You're more than likely to go ahead and get it done. So again, just tying everything back to what I said, I don't really think that you can fully remove the human element from this whole process of what you guys want to call funding or in finance. But I definitely feel like AI and tech, you got to get with it or you're going to get lost. Engage in the content, engage in what we have going on. Trust me, the human element is being removed from a lot of facets of society, of funding. But trust me, if you have like the it factor and the person, and you're able to convey it over the phone to the person that you're speaking to, chances are you're going to have better results.
That, and also problem solving, right? And I think that that's also too is being able to pivot from
and troubleshoot live,
but being able to pivot to a different program. If you have a need for the capital and you're going to use it, I think at the end of the day, it doesn't matter how you actually receive the funding. It's just being able to allocate it correctly or put it into something that's going to be productive or have a return on your investment.
Brokers in the human element now, especially with everyone going into tech, we're more valuable than ever. The person that is in business and the person that's working a regular 9 to 5, they have no idea what the hell they're doing when it comes to funding or trying to find options for themselves. They research a whole bunch of stuff, and they have so many options, they don't know what's the best one to go with. It's our job as the brokers to steer them like the shepherd, and we have to help them navigate through these shark-infested waters, and we need to go ahead and steer them in the right direction to probably narrow down. They're just going to Google, hey, I need a home equity line of credit. 50 things comes up. They ask ChatGPT probably 1,000 different options. Hey, listen, but we have that option that can get you done in 24 hours.
Was that you being a shark with this?
This?
Okay.
My final thought when it comes to AI and tech, listen, evolution has gotten this country to the greatness it is. From manufacturing to the gold rush to housing to mining to even military been great. But one thing that never changes is the human element. I don't care if you're applying for a merchant cash advance, an SBA, a home equity, or a mortgage. The relationship between the person handling your finances is important. Almost every HELOC I've done and every mortgage comes with a story. That client is telling you they need this money because this is my first house. I'm taking out money because I need to put an extension on my house because I had another kid. Even with an MCA, they're going to tell you, I'm taking out this business loan because I need to buy more inventory so my company could become successful or to stay afloat or my season. Even though someone comes in saying, you know what, I want a traditional loan, I want 4%, I want $1 million. But then they get on the phone with Jose and he said, okay, you want $1 million, I can get it to you. But what do you need right now? And all of a sudden that million comes into, I only need 75 right now, but it may be a whole year I need $1 million. And he doesn't realize that one question of Jose asking, what do you need right now, changes his approvals. Because him walking to a bank asking for $1 million, he's not getting it. But by Jose actually asking, what do you need the money for? What portion of that you need right now solves that problem. With the home equity, there's always a story. I needed to buy another investment property. I saw a great deal. Then we go, okay, you do the home equity. Guess what? We can give you a DSCR loan so we can give you a 30-year on top of that. Or a property that they're like, oh, you know what I got during COVID? I have a great rate, 2%, 3%. I can't touch it. And all of a sudden, we're able to get them $250,000 on a HELOC on an investment property. An open line that you could pay back. So the opportunities and that conversation with that broker or that banker is pivotal to the success and satisfying the needs of the client. And AI can't do that. And AI won't sit there and listen to you and understand your tone inflection when you're talking about, oh, I got to pay for college. I need to pay for this truck. AI is not going to listen to that. We do. Here at Fun Rock Lemonade, we care about our customers. It's not about the transaction. It's about the relationship. And that's why we do what we do. AI can't do that. We're long term.
There should be something called an AI stand.
Wow, click that. If only AI stand. If only that could be my avatar, just follow me around like I'm a Pokemon. All right, Jose, what's up?
All right. So my final thought is the following. Just understand that tech companies are not.
Hold on, really quick.
Yeah.
Did Stanley just mic drop us?
Yeah, he just left.
He just mic dropped and just did. Huh? This guy's crazy. Go ahead.
Just understand that tech companies are not replacing lending, right? If anything, they're just rebuilding it. They're changing the way processes get done, which at the end of the day, I think it's only to become more efficient. The best thing for you as a broker or as as a broker, what you should do is just learn the different programs, learn the different avenues, and just learn how you can maximize or become more efficient for the client through several different programs, whether it's a HELOC Express, whether it's the SBA Express, and that's why a lot of these programs now have the word express next to it, because it's supposed to create or just let you know that it's efficient and fast. So don't shy away from it. Don't think that it's going to replace you. If anything, learn the technology, learn the programs, and also learn and identify the need of the client so that it's able to go ahead and you're able to monetize on it. All right. So thank you very much again. Darrell, your final thoughts. You want to take us away?
I have a bunch of relationships in the business lending industry, and just knowing about the tools that I have here, at Lemonade Capital, I just see that we are just like, as far as like tech is concerned, how we market, how we generate interest, how we follow up with funded deals, how we follow up with people that are interested, how we, our marketing material that we blast out, and just the responses that we get back. I know that we're light years ahead of other companies as far as like tech in our industry. And Lucas is a wizard at what he does. Radical, shout out to Radical. Radical's a wizard at what he does. And I know that we are on the right path. See, technology is ever it's I know it sounds cliche, but it's ever evolving. And you guys know that technology wins wars, and the most tech savvy company, information wins wars. The people that are going to be able to get the information fastest, time kills all deals. If you're fast, if you're efficient, if you're the most tech savvy, the chances of you being able to win those deals or win those clients over, it's exponentially greater. And I just, I'm very excited about where I've actually landed here at Lemon Capital. And this is not just because I'm sitting next to, one of the owners here. It's because we really do have the shit that other companies really don't. Make sure that whatever tech that you guys are even trying to develop with your company, make sure that it's user friendly and they're able to do things on their cell phone. I can't tell you how many times that I've sent somebody just an application. I text them the link and they complete the application on while they're at the smoke break outside, and they're able to go ahead and get the application done right from the comfort of their job or their own home. They're able just to go ahead and get it done in 5 simple minutes, able to upload documents on their cell phone and get it to me, and I'm able to get them approved and funded in the same day. I mean, you just can't compete with me if you're on the phone and if you're dialing 300 calls a day and you don't have a way to go ahead and get the application over to them. I mean, you're never going to beat me on the deal. Where these guys actually power us is that we're able to actually go ahead and transfer that technology into every single product that we have under one roof. So not only do we have the best products in the industry, but as far as getting approved, we make it so simple for people to go ahead and get it done. And I got to tell you guys, I mean, listen, technology is going to replace a lot of companies, but it definitely cannot replace our company. It's very easy for you to go ahead and get approved. It's very easy for you to go ahead and get funded. We make the process just so similar. Just so simple. And, that's where every company is headed. We're just ahead of the curve. One last thing that I definitely want to leave you, ladies and gentlemen, with is, consumers right now are comparing lenders to Amazon. They want to just be able to open up their phone. They want to be able just to choose what's what. They want to be able to move forward. But you better have the products, because people don't handle rejection easily, especially if you're not even going to speak to them and they're just blindly applying. You want to make sure that you have all your kit and caboodles, buttoned up to the T, and just make everything simple for people. Ladies and gentlemen, I'm your host, Radical. Cue it up, baby.
The Deal Room.
Ladies and gentlemen, I'm your host, Darrell Mills. Thank you for tuning in this Thursday. The early entry with Stanley and the closer, aka Texas Talker. And to my right, I got my boy Jose Martinez. Tune in next week.
By Brokers Connection.